Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast partners, Massar, Tim Stenovec. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, all the gains we saw yesterday, gone today.
Yeah, right. A new day and certainly a different trading modality, if you will. But what's interesting is, and I love when that headline crossed about JetBlue making an offer for Spirit. New York Times reporting this. We saw Spirit take off in a big way. It's just a reminder, though, that corporations are willing to put takeover offers out there. And that, to me, is one of those stronger sentiment signals about maybe what's going on in this market.
Yeah, and quite the premium on that takeover offer as well. Romaine, you said the gains from yesterday evaporating today. Tech really taking the brunt of it. The NASDAQ and NASDAQ 100 both having their worst day since March 7th. So just about a month.
Yeah, only Twitter getting a little bit of love. Always get that idiosyncratic news coming from Elon Musk taking a board seat. But overall, this is a unwinding. And once again, the reasoning is all about the Federal Reserve, all about central banks tackling inflation and at a hefty clip, whether it be 50 basis points raise that we get from that exclusive conversation with Esther George, or whether it's more of what we do with the balance sheet and how quickly we act to tighten there, Taylor.
And really interesting, we heard from Eddie Perkin, of course, over at Eaton Vance for our radio audience, and sort of wondering how you make all of this work. You can't just all of a sudden have a $9 trillion balance sheet and then flip the switch and decide to raise 50 basis points at 3 or 4 subsequent meetings, and suddenly all of it, everything is okay.
Yeah.
It's going to be tougher than we think it may be.
Yeah, and I think all of this is really going to come down to some of the trends we see in consumer spending, whether they hold up or not. That will be a big determinant of where this market goes beyond today. As for today, the Dow Jones Industrial Average lower by about 0.8%, 270 points or so. The S&P 500 down roughly 57 points, or about 1.2% here on the day. The NASDAQ, one of the biggest underperformers here on the day, down about 2.3% here on the day. And the Russell 2000 down about 2.4% here, as pretty much everything tied to this economy, at least in the broader macro sense, getting sold here. Only a few of the idiosyncratic stories to the upside.
Yeah, and continue to keep an eye on those transports. I know it's something that we've all talked about, down another 2.8% on the Dow transports. And so we have seen a significant drop in the last couple of days. Whether this is a sign of a potential slowdown in the economy, guys, or is it just a case of we're going to all stop buying so much stuff and we're going to get back to kind of historical, numbers when it comes to spending. And so that means this group has got to kind of recalibrate a little bit.
Well, yeah. What do you mean by stop buying stuff? Is it because we want to or we have to?
Well, I don't know, but
or maybe we have the stuff that we need, and that shift that we saw in consumer spending from services to goods goes back to services.
Maybe we're spending more on services, so we're not spending so much. I mean, we are above historical levels when it comes to spending. Do we really think that that's going to continue longer term? And so that could certainly play out in the transport sector.
It really is interesting, Carol, as we think about some of the big movers on the day for the radio audience, the sector winners, maybe here the sector losers. It's household products and food and staples. As you think about the stuff that we're buying, was only one of the 2 out of the 4 sectors in the green today. It's utilities, pretty defensive move despite yields rising. So really interesting price action, at least up at the top. Pretty much everything else is in the red from a sector standpoint. Carol, I'll bring you down to the bottom of the screen, and it really does feel risk off. Right? When you think about auto components, semiconductors, that transportation index that you highlighted, technology, hardware, those are off anywhere from 2.25% to about 4.8%. So big rotation out of technology today.
Yeah, no risk off when it comes to shares of Twitter. We know they were up 27% yesterday. Now another 2% added on that gain today. So one of the outperformers. We know the story. Elon Musk, his passive investment, not so passive, getting a board seat and continuing to really play around in this company. So that's getting investors' attention. Wanted to mention RH because Gordon Haskett's check Rome out reiterating his accumulate rating on the company and suggesting that the CEO's sale of about 1.7 million shares of the company paves the way for an aggressive buyback campaign. There's more in that research, but nonetheless, you did see investors taking notice of that, and that was up about 7%. Meantime, Spirit Airlines, got to point it out, we saw the trading halt because of that news coming from the New York Times about JetBlue making an offer for this company. But nonetheless, interesting to see what airlines in play.
And we just, on Bloomberg Television, we just talked with Bloomberg Intelligence's George Ferguson about this. He raised an issue, too. I mean, because we know Spirit had that deal with Frontier Airlines, but he kind of raised the issue that these are two companies with pretty different cultures when it comes to Spirit and JetBlue.
It's funny that you said that because Tim and I were saying about kind of maybe just how JetBlue, remember when they were the upstart and they were doing it so differently? They're kind of an older airline at this point. And I do wonder if they're looking for a new revenue line at this point and somehow finding or thinking about economies of scale.
Have you ever flown Spirit? That's it's night and day from JetBlue.
Well, I know, but JetBlue has also changed from its origins a little bit.
Yeah, true.
Okay, it's not the same. I get your point.
Well, Spirit certainly finishing higher on the day. Different story for JetBlue. Oftentimes what happens when we see deals like this or potential deals like this announced, the acquiring company does move lower. No exception for JetBlue, finishing the day down by 7%. Also keep an eye on shares of Tesla. Yesterday, Tesla did finish higher by 5.6%, so giving some of that gain back among the worst performers in the S&P 500 on a points basis today. And then also watching shares of Starbucks, finishing the day down by 4.5%. Yesterday was Howard Schultz discontinuing that stock buyback plan. Today, Wedbush cut its recommendation from outperform to neutral, cut its price target from $105 to $91, citing a lack of catalyst for the, quote, foreseeable future.
Ouch. Meanwhile, let's have a look what's also on the downside. I tell you where there is a catalyst and what is getting people to perhaps hedge a little bit is over in Europe. Remember, we do have not only a war that we keep an eye on, but also political change, potentially political, certainly elections in France, that suddenly people are getting a little bit more nervous about how tight the run between Macron and Le Pen could be over in France. We're seeing the euro down 0.6%. Yes, that's as we see a stronger dollar, but it's also as we potentially see people starting to protect themselves to the downside and what could happen to the euro if indeed we did see some sort of shock occur over in France and its political system. I'm looking at the Aussie dollar on the higher side. This is we see the central bank there, Australia, really focusing in on having to tackle inflation too. We've had, of course, talk here in the US, hawkish sentiment coming from the Federal Reserve. Well, the Aussie central bank also having to talk tough about how quickly they raise interest rates to tackle inflationary pressures. The Japanese yen down once again. I mean, near 7-year lows, as even talk from their central bank head isn't enough to steady some of the sell-off in the yen, of course, as the Bloomberg dollar index pushes higher by 0.4%. That, of course, perhaps takes the wind out of the sails of the oil trade. We're off by 2.7%, even as we heard more concerns about potential sanctions heading from Europe towards Russia. WTI crude off by 2.7%, Brent crude off by 2.2%. That's $105 a barrel. We see nat gas push higher, up more than 5% as we're worried about the weather, the cold that could affect here in Easter in the United States. And lastly, I'll leave you what a global sell-off in bonds. In Italy, yields up 17 basis points. In France, up 14 basis points. And over in Belgium, too. Europe really selling off hard, Taylor.
Same here, Caroline, with full faith and credit. Really big moves, of course, on sort of the long end of the curve. Quickly here for the 2-year yield. Think it's interesting. You see moves higher of about 11 basis points, but I've counted and you've had at least 8 days this year that have seen bigger moves. So sort of that front end volatility, today's perspective, nowhere near goes some of that. But you are seeing a lot of this volatility on the longer end too today, Carolyn. Today's sort of 16, 15 basis point move is the biggest one-day gain that we've had in yields since March 16th of 2020. On that day, you had a yield move higher by about 36 basis points. So really puts all of this volatility into perspective. We've really, though, been focused on that front end, given some of the big comments from the Federal Reserve about that balance sheet and big tightening coming our way.
All right, so 2 p.m. Wall Street time tomorrow, FOMC meeting minutes, Romaine. So I do wonder if we'll get more clarity about the balance sheet. Maybe we'll see what kind of debate was going on to see whether it supports what we heard from all of these women from the Fed today.
Yeah, and I mean, look, Powell has basically said that we're going to see some of that discussion. I guess the question is really how aggressive are they going to be with that? When you look at the comments that we heard, particularly, I thought, from Mr. George, I think it's interesting that we could potentially be looking at a Fed that is a little bit more aggressive than maybe what was already priced into the market, if you can believe that.
So at this point, is that already priced into the market after those comments today?
I just said no.
Right?
Are you listening to me, Tim?
Yeah.
Okay.
That's what I'm wondering.
Wait, did you say something?
I'm just joshing.
He likes a little mumble.
Yeah.
But, I mean, we are seeing remarkable volatility and two disparate voices and viewpoints perhaps coming from the market, whether or not the equity market is
I have like
perhaps
this
a lot
song
more
in my
upside.
head right now, and I can't get it out.
Okay, do sing it afterwards. Tantalize.
Oh, no,
Why not right now?
No.
Do we have the rights to it?
Caroline
Romaine?
wants to be serious.
Do
Caroline,
we have the
go
rights
ahead.
to the song?
I want to be serious.
Do we have the rights? No. Thanks.
Well, Romaine singing it. Yeah, exactly.
Thanks for reminding me, because I was about to belt it out.
Meanwhile, we're all discussing which cruise we're all going to jump on next as a team and whether we can take a camera crew too. But
did you hear about this, Carol? Me, Caroline, and Taylor, we're going on a cruise together. 3 bunks. I get the middle bunk.
Intimate. As long as he doesn't sing, I don't mind.
Isn't there like a reality show
Wait.
like this or something?
That's
We're cameras all along. We've approved
This is below deck Bloomberg.
Al has approved this. We're all signed off on, ready to go.
As long as it's not too
That's not
expensive.
true.
There is some inflationary pressure that goes on with these troubles.
All right, I'm going to get serious like Caroline did. Anu Gagar over at Commonwealth Financial. She said, you have to think about inversion doesn't actually cause recession. We need to think about what actually causes a recession. And she pointed to the things that show strength in the economy, whether it's the labor market, balance sheets, which I know you love talking about, Romaine, and also earnings growth. So we need to be smart about, yes, when we see inversion, we often get a recession, but it's not the inversion that causes the recession.
Yeah, good point.
Just going to say it.
And whether the earnings come out and start to back us up fundamentally, Carol.
Yeah, absolutely. I just want to know, did you take Spirit to France, Romaine?
No.
Does Spirit go to France?
I think it's really focuses domestically.
All right, guys, we got to run. We'll see you tomorrow. That'll do it for our cross-platform coverage on radio, TV, and YouTube. It is Beyond the Bell. We will see you again, same time, same place on Wednesday.